200% growth. That is very, very good. It looks good. It tells everybody who has been hating on Palantir that they don't have commercial clients, that they are growing big time. And don't think that this growth of almost 100 clients is just SPAC investments. It really isn't.
We interrupt our program to bring you this important message.
Good morning, everybody. This is Jat from the Bliss Life. It's the 17th of February, 2022. And you know what that means? It is the Q4 earnings results of Palantir. I have the earnings presentation in front of me. We have 30 minutes left for the presentation call, for the earnings call. So let's run through this and then let's just jump right into that. The Q4 2021 earnings of Palantir. This is the financial deck, the presentation that was put out. We'll go through the actual financials later, but this does a great job of summarizing the key facts. So let's go right through it. Okay, so Q4 year-over-year growth. So total revenue growth was 34% year-over-year, or for the quarter. Government grew 26, commercial grew 47. So commercial looks very strong. Government looks weak compared to last year. US commercial revenue growth 132%. Adjusted operating income of 124 million with a 29% margin. So that's very good. Adjusted free cash flow of 104 million per quarter. The adjusted free cash flow, the adjusted portion, means that they're carving out the share-based compensations payroll tax portion, which is excluded. They mention it here in the details, which you don't really pay attention to in the press, but they say the margin excludes stock-based compensation and related employer payroll taxes. That's for operating income. Adjusted free cash flow excludes employer payroll taxes related to SBC and the purchase of property and equipment. So it excludes payroll taxes and includes purchase of property and equipment. I think that's what they mean. If we go to the reconciliation that they would have somewhere in the end, here you go, cash flow. So 333 cash flow from operations. They add back this payroll taxes, and then they remove property, plant, and equipment. So that's good. So they're removing purchases of equipment from the cash flow, and they're adding back the stock-based compensation payroll taxes. So they're doing pretty good. $424 million cash being generated. That's very good. If the market cap today is around 25 billion, then they're trading at 25. So times 10 would be 4. So they're trading about 50 times cash flow. If my math is correct. I don't know if I'm correct right now because it's early, but 25 million divided by 424. Yeah, okay, yeah, 50 to 60. So about 50 to 60 times cash flow if they have a market cap of around 25 billion. So that's pretty generous, but that's what you would typically see of a company that's in a growth phase. Now, let's continue to where we were. So adjusted free cash flow, 104 million, 24% margin, gap gross margin of 80%. That is very, very good. Let's look at the financials just to make sure that I can make sense of this. The financials get put out. No, this is the 8K. Okay, but let's see here. Let's do some quick maths. Let me pull out the calculator. All right, so we say gross margin 1202. Oh my god, yeah, they're not lying. Well, 1202 over 1541, about 80%, 78% to be precise. But well, not really precise, but I'm doing this. Yeah, 78%, so they rounded up to 80%. That's pretty good. That's pretty good. Let's keep going. For the full year 2021 results, revenue growth of 41%. The government revenue growth is 47%. So they almost grew 50% year over year for revenue. Commercial, they grew 34%. Commercial revenue growth grew. US commercial revenue growth grew 100%, which is good. Adjusted operating income of 473 million. Adjusted free cash flow of 424. So all of this excludes SBC payroll taxes, and they added back property, plant, equipment. Okay, 78% gross margin. Okay, so yeah, that's what I calculated earlier because I was looking at the year. But if we're looking at just the quarter would show us that it's actually 80%, which is what they did before. So the 345 here divided by the 433, you get your 80%. So this is 80%, this is 78%. That is looking very, very nice. Now, let's keep going here. What the takeaway on this slide, it's high growth, high cash flow. So what they're trying to show everyone is that companies that typically have high revenue growth, so the ones that are growing at 100%, they're barely generating any cash, zero cash, or like less than 20%, clearly less than 10%. Those that are making 50% revenues, the range of cash flow that they generate goes from less than 20 all the way up to 40ish. So Palantir is right there, doing very good. They're about 41. They're about 28%. So they're somewhere in between, and that's because there was huge payroll taxes this year, right? If we look at the payroll taxes related to SBC, let's go look at it real quick. You would see right here that cash paid for taxes related to SBC was 100 million. So if we were able to remove that, then we lift it up a lot higher to the 400 mark. So this is something we need to really look at. Let's go straight into the next slide. In the next slide, what are they talking about over here? So they're talking about where it has to work. There is only Palantir, giving some use cases that people can really understand and really grasp. So they talk about how the Airbus A350, they had a production crisis to build up the product. So the planes, so Foundry was involved in helping out with that. This goes back to the point where Alex Karp said, oh, well, he's surprised how reliant Europe is on Palantir to avoid crisis. So they've been able to stop a lot of attacks in Europe, evacuations in Afghanistan, power in the US vaccine program, PP&E, identified $200 billion Russian money laundering operation, assisted FAA with minimizing air disruption and maximizing passenger travel. So this is something that they've worked on, with the Boeing Max 737, I believe it was, which had some, software issues. And the FAA really needed to get that all under control. So Palantir was involved there. This is a kind of a response to people who say, well, Palantir is just so expensive. But the truth is, Palantir's pretty affordable compared to its peers or other companies. So, for example, NHS spent 155 million pounds in trying to get a program together, whereas Foundry was 25 million. It was a lot more efficient to develop it, not develop something in-house, but buy something from Palantir Foundry and get access to that license. Here they're really showing the time expansion. So how the total addressable market has grown for Gotham, how these products in of itself is creating new markets and new opportunities. So that's also based on the evolution of the product. So you see here, in 2013, they started off very simple, but now in 2021, they're offering governments Edge AI, Meta Constellation, and Titan. So this is huge. Foundry, as they're adding more and more modules, they're growing they're growing their addressable markets, and they show here that the addressable market is a lot bigger than where they are today. So one thing I like here is management's acknowledging that Foundry has not yet grasped the entire market that it could, which means there's a lot of potential. And that goes back to what Alex Karp was saying. There's over 300 modules in Palantir Foundry, so these modules are going to help drive growth. Apollo, it's even bigger and better. They say that they're bringing Palantir to any SaaS environment, and this is an issue because a lot of environments are in play right now. There's governments who need their own private clouds. There's governments who want it actually on a hard server in the country, that they want their data and their software. There's commercial clients who are dealing with AWS or Azure or some other cloud provider. So Apollo really just brings that all together and allows developers to not have to worry about customizing their software for these different types of clouds to maintain the functionality as they upgrade, as they scale. They just have to worry about going through Apollo, and Apollo will attach will be the interface to make sure that everything goes smoothly with all cloud providers or other requirements. So this is what they talked about, bringing 2021, bringing customers to any SaaS environment. So this is good. I like this slide. It really showcases potential, and it demystifies, it cracks the black box, if you will. Products. So they released new products since DPO, Edge AI, Hyper Auto, Cosmos, Apollo for Customers, SaaS, Meta Constellation, Ops PI, Titan. Customers are saying Foundry is to app developers this decade what was AOS to them last decade. I mean, this is a bit of a fluff. Nobody knows. Joe, Merck. So this is the cancer collaboration that they have, Palantir. This is the semiconductor partnership that they have with Merck. Swiss Re. This is a very big insurance company. They're involved in reselling insurance or possibly issuing insurance. Airbus with their Skywise. So this is there's a lot of value offered here. Now, this is where it gets interesting. The focus on customer growth. The total customer count. People have always been bringing Palantir down for this. Palantir's customer count grew to 237 from 139 year over year. This is huge. 71% growth. And net dollar retention is 131%. And this metric is a metric that's often used in the marketing world, but what it means is that it talks about growth. It talks about how much money are you getting from your customers that's recurring on average, and are you expanding. So if this number is lower than 100%, it means your revenue growth is slowing down, that your business with your customers is decreasing. And if you're over 100%, that means you're growing. And I looked it up, and it said that the average net dollar retention of companies that have successfully gone public is just under 107%. Anything over 120 is excellent. Is beginning ARR, so annual recurring revenue, minus the churn, so what you're losing, adding the expansion, what you're gaining, divided by the beginning annual recurring revenue, that gives you the net dollar retention. So this is good. Net dollar retention is at 131%. That means they're growing, and this goes back to their business module, right? Acquire, expand, scale. And scale. So this shows that this business module is working. 71%. So that's very good. Let's look at the little information here. Net dollar retention is calculated as revenue for the current year attributable to the customers as counted for the prior divided by B revenue for the prior year, same for the same customers. So same customers, this is key, same customers are resulting in 131% growth. So it's not a fugazi. They're really doing a good job at growing and expanding and scaling. The module works. The business module works. So commercial momentum, commercial business. Let's take a look. Commercial revenue growth year over year, 19%, 28, 37, 47% growth year over year. This is huge. Net dollar retention, for overall customers in the commercial business, it's 113. In the US, it's 150%. International, it's 100%. So overall, they're growing. They're doing well. The customer growth, they say it's 200% growth from 49 to 147. That is very, very good. It looks good. It tells everybody who has been hating on Palantir that they don't have commercial clients that they are growing big time. And don't think that this growth of almost 100 clients is just SPAC investments. It really isn't. It's investing in its customers. And don't forget, it's investing in its customers, but the revenue that it's getting back from the customers, Palantir's portion of that revenue that is buying back, it's negligible. It's usually all the other shareholders of these SPACs that are contributing to purchase Foundry. So it is not what people say Palantir is buying back revenues. Palantir is investing in innovative companies. And when they see potential, they say, okay, you know, I'm going to ride that journey with you to where you want to go. So I'm investing in you and you're going to do business with me because I know I can help you get there, get where you need to go. So that's very promising. So US commercial momentum, US commercial growth, here it has been huge. High double-digit numbers, 132% growth in Q4 2021. That is fantastic. U.S. commercial growth, they went from 17 to 80, so 370% growth. That is very strong, very promising. U.S. commercial sales investment will fuel 2022 growth. So this is where they talk about their headcount. This is good. This is what I want to see. Sales headcount. They have 80 people in sales headcount now. Before they had 12. And Alex Karp keeps alluding to this, you know. They haven't been focused on selling cheap products and developing quick sale products and gimmick products. They've been focused on developing the best products, and they've been sleeping behind the wheel on pushing sales, but now they're pushing sales. They got 80 people in the sales organization. They hired a new leader who has years and years of experience doing sales in Europe. So this is going to be important. So, you know, 80% growth. And I love that they stress the fact that they have people over 9 months experience, because the learning curve for sales teams is important. They need to understand the product. They need to know the product, and they need to have the confidence to pitch the product. So now they have 25 people that have over 9 months experience. So these 25 heads are going to be adding a lot of value, whereas the 55 that are in training, they're going to eventually get here. And when they do, they're going to start pushing towards the bottom line. So it's very good. It looks very good. US commercial cohort. I think this is the discussion of acquire, expand, and scale. So they have different cohorts, and in the acquire phase, you know, the customers are negative contribution margin. In the expand phase, the contribution margin is growing, but it's under 100 million, I believe. And when it's scaling, it's above 100 million. So let's look at this. For the purpose of this cohort, a cohort for a given year is defined as all U.S. customers from whom Palantir generated revenue in such fiscal year, and Palantir generates zero revenue in the immediately preceding fiscal year. Let's say 2017 cohort, commercial cohort. So back in 2017, before these periods, the revenues were largely zero, but it's 32 million now in 2018. It drops to 19, 9, and it's going back up to 11. So these are old customers that they used to make money with, and now they slowly lost those customers because they developed Foundry. They pivoted away from older products that they had, and they're slowly getting that number back up. And then here we see here 17 million. That's for the 2018 period. So anyone before 2018 was zero revenues, but then they acquired at 7 mil. Before that it was 0, then it got to 10, then it got to 15, and then it got to 17. So slowly adding revenues to those same customers. Over here, 2019 cohort. So before 2019 it was 0, then it was 19, then 69, then 102. So it's been growing very strong. There's the 2020 cohort. So before 2020 it was 6 million, but now it's 18 million. So it grew 300%. And then before 2021, it was 0, and now it's 53 million. So they're growing at huge numbers. And take a note of how big these numbers are. 53 before, brand new customers. Before, brand new customers were 6 million. Before that, brand new customers were 19. So it's a bit sporadic, but the jump from 6 to 53, it's almost 10x. You know, if they had 7 more million to add, it would have been 10x. So that's huge. So it's good, you know, acquire, expand, scale. It's working. The products are working, and be mindful. Their sales team before this was super small, very small sales team. Only 6 experienced people, 25 experienced people in 2021. Before that, it was 6. So you could see the jump. The jump is huge. 6 to 53. It's only going to get better. This is how many customers they have outside the US. Okay, that's that. Here, this section here, they're talking about how many heads they have doing non-US. Okay, so that's what they're doing. My bad if I confused you. The left side here is talking about how many heads they have in sales. This, they talk about how many customers they have. So now they have 29. So if we do some number crunching here, before they used to have 32 over 4. So each head count was working on average 8 customers. That's what we're seeing here. And now they're saying they have 29 heads and they have 67. But when we look at 29, 67 over 29, they're only, it's like saying, oh, each head only contributed to 2. I don't think this is the right way to look at it. What we really need to look at is who has more than 9 months experience in sales, and look at it that way. And those others are probably mentoring, shadowing, and are just getting ready, testing the waters. So I would look at it as 67 over 6. So when you look at it over that, then you get to about 11 heads. So one customer deals with 11, one salesperson deals with 11 customers. So this will be an interesting metric to follow as the company goes through the quarters, to see, you know, how these head counts, these salespeople in training, as they start filling up and becoming more experienced, how this number changes. That's what I'm excited to see. Government business. This is what people were scared about before, saying government business has been slowing down. Year-over-year growth in government business, 26% in the quarter. This does look very scary. Total government, 146% growth. So they have been growing accounts with the government in a great way. In total governments, US government 141, international 161. So it's growing. It's very strong. The same number of governments that they're dealing with, 90 last year, 90 this year. So the trailing 12 months revenue, it was 3.1 million in 2018, but now it's 10 million as of December. So they're generating 10 million on average for 90 customers. So that's what, $900 million trailing 12 months. Looks good. And you know, don't forget this number. It looks kind of scary, like 26% growth year over year, but these numbers, the higher they get, the percentage just decreases, right? So you need to be mindful of that. Government growth cohort. Okay, government cohort growth. So here they're saying from prior fiscal years, so it's growing. So you see here, like, this is where it gets interesting. 2018, so customers before 2018 was 0, but now it's 282. Customers before 2018 was 0, but now it's 199. So you see here, year over year, that number is growing. They almost grew to almost 80 million. So that means that when the customers used to be 0 before 2018, now it's 80 million higher than the prior year. And before that, in 2019, these customers were 61. You know, so it's growing big time. That's what you want to see. The trend is you want to see these colors get bigger and bigger. It shows that it shows the business model works. The acquire, expand, scale works. And that's what we see here too. You see here getting bigger and getting bigger, getting bigger, 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 getting bigger. That's what's important. And then here you see it's getting smaller. So that means they were losing those customers over time, which happens. So now US government cohort. So here they're showing that the revenues are relatively flat from revenues before 2017 or from the clients before 2017. But then you see here before 2018, it's getting bigger. Before 2020, it's getting bigger. So these are important takeaways. Path to GAAP profitability. Oh my God, these guys are killing this presentation. They really thought about it. Oh my God, this is great. Gross margins, 84%. So here they're showing that 83% adjusted GAAP gross margin. This, I can't distinguish between the two, but it's very close. It's so damn close that it doesn't even really matter to me. Adjusted gross margin excludes stock-based compensation. Okay, great. Operating income while investing in growth. So here they're talking about how the GAAP operating margin is probably this, which is negative, but it's improving. It's at 14%. The adjusted operating margin is at 29% once you exclude SBC. So this is positive. You know, we need to wait for SBC to normalize, and this is going to be a very, this number is going to go, and you see the trend. It's going up there. So that's very good. Yeah, that's it. So look, the call is going to start in 2 minutes. We got to debrief. We got to look at the presentation a bit beforehand. I think these details are not going to change in much depth. One thing I did notice is that they never, in the customer growth, they didn't talk about how much was from SPACs. But we will be able to see that from the financials. In their last press, they did do that. They probably excluded that to not create a lot of buzz. But let's take a look. Let's take a look at the financials and the presentation in a bit. So let's go.